welcome everyone. I appreciate you joining today's session of Internal Audit. Do you need help? I think as many of you probably know, this is one of a series of business trends webinars that we're going to hold between now and through the summer on a variety of topics. This particular topic is going to talk a bit about internal audit and how to effectively use internal audit. We have a variety of other sessions upcoming that I'll talk about towards the end that will address a variety of different topics that are maybe relevant to you. So by way of background, I'll give you a little history of myself. I'm a partner with the firm, Bailey. I actually head up our internal audit services practice, and I've got 30 years of experience. Just by way of warning, maybe, my background is primarily healthcare. So as we talk about things throughout the session today, I will most likely reference some things in the healthcare industry, but I'm certainly going to try and make this a bit more generic industry across all industries and provide some examples that may apply to a variety of industries. I also have regulated and public company experience. I've worked on SEC engagements, insurance companies, and been involved in some of the Sarbanes-Oxley work over the years. And my contact information is below. One other item I'll probably mention is heading up our firm services. We've been performing internal audit and related compliance work for several years across a variety of industries: healthcare, financial services, banking, government, not-for-profit, etc. So with that, I'm not going to do anything further as far as sales pitches go. I'm going to kind of go into the session today and talk a little bit about what we plan to cover. And certainly as we move through this, if you have questions, feel free to send those on to me or on to us so we can address those at the end. What I'd like to do for this group today, and I know we've got a broad group of people, some of which work in internal audit, some of which are in the finance or other related areas, and so I probably want to give a little background on what internal audit is, how it's defined, talk a little bit about roles and challenges of internal audit, how at least I see how the value of internal audit can really contribute to the organizational improvements and effectiveness and efficiency. Talk a little bit about some of the core opportunities and things that are being done with and how internal audit's being used. And then also spend a bit more time on, I called it emerging areas of interest. It's probably areas that maybe have been built into internal audit functions. Internal audit's been taking on some challenges around certain areas. And they're probably, in the last 2-3 years, these have been evolving, or maybe more recently. And so a couple of them are unique. A couple of them probably are not going to be real surprising to you. And I'm going to spend a little bit more time relative to our presentation today on a couple of those areas. Again, each of these we could probably spend a whole presentation on individually. So to some extent, we'll move through this relatively quickly on topics but again, if you have any interest in learning more about them, certainly provide some feedback and we'll try and build that into future presentations and webinars. First of all, I often like to start with defining internal audit, because I think some of the definition may surprise some people that aren't as close to it. Those that work in internal audit, it's probably not too surprising to you. And this is a definition by the Institute of Internal Auditors, which is the primary organization that sets policy and helps oversee the industry and practice of internal auditing. And the definition they have used is that it is an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. It helps the organization accomplish objectives by using a systematic, disciplined approach to evaluate and improve effectiveness of risk management, control, and governance processes. And I think a couple things to point out about internal audit, and I think helps portray the value, is, first of all, it's an independent function. Although many organizations and many people on the phone are part of a company and they're paid by that company, in theory and in practice, the function should be independent. and there should be the ability to report independently up to the board, audit committee, or others on any of its findings or issues that they identify. And I think the value of internal audit does come from this independence and objectivity, because, as many of you know, oftentimes there are things that are concerning to people in the organization, whether they be operational or finance people, and to be involved and spend time looking at them certainly can create some conflicts. And utilizing internal audit can help free up individuals or different functions from that potential conflict internally, and allow someone who has some level of independence to review it. So I think that's certainly a value. I think the use of the word of assurance probably doesn't surprise people, but the use of consulting in the definition may be a bit surprising. And truly, I think an effective internal audit function clearly is doing consulting to the organization. And we'll talk a little bit more about that later, in how they look at operations, processes, procedures, and effectiveness and efficiency of those functions. When you move to the second paragraph, I think it talks about risk management, control, and governance. Certainly control. I think you look at internal audit and their involvement in the control side of things, tend to be fairly well expected or understood. I think when you look at their role or the opportunity to assist in risk management and governance is maybe something that isn't always identified as being central to internal audit activities, but it clearly is, and it clearly is part of the definition and the internal control structure of an organization. And we'll talk about each of these a little bit more as we move through this presentation. A couple other thoughts around risk and internal control. Role of internal audit activity: identify risk, review controls, assess residual risk. This is probably more along the lines of a pure, process review. But I think as I talk about internal audit through this presentation today, the point I'd like to make is that any process and control in an organization, and control activities in an organization, assumes there's risk. It's pretty difficult to eliminate risk, but what you're trying to do is find that proper balance of control and risk in anything you do. And I think particularly if an organization and internal audit activity is doing their job right, they're identifying the appropriate controls, the best practice, but also identifying what residual risk is left over after these controls are in place. And is it at an acceptable level for management, or is there additional controls that are needed? Or conversely, are we spending too much time and money on a control? Is it not efficient, or are we controlling to a level of risk that's lower than really management is willing to assume? And in that case, there may be some efficiencies that are out there. So again, I think challenging internal audit activity, I think to the extent it's being done appropriately, it is looking at residual risk and where that is and whether that's acceptable to an organization, and helping evaluate it and put some framework around the risk that's out there with respect to certain processes and functions, and ensuring that management understands what that risk is. This slide really is meant to talk about those people that are out there operationally from a finance or other operations area, and the challenges they face. Some of these, apply to an internal audit function as well. Certainly, the regulatory environment continues to accelerate, grow. The need to stay close to regulatory risk is important as well. The need for organizations to manage regulatory requirements are extremely important, as well as compliance requirements. Certainly, certain regulated industries even have requirements for testing and evaluating certain areas of risk and controls. Changing business conditions also create challenges to organizations, whether it be new contracting relationships, new services, and certainly we've seen over the last 5, 6, 7 years how business conditions have changed with the advent of technology and the additional complexity that comes with it. Along with that, in my travels, I tend to see that most organizations aren't in a situation where they have lots of extra time. Resource constraints are certainly out there within finance and accounting functions, other operational areas, and so they're always challenged with trying to balance these needs and requirements with managing their day-to-day activities. And the continued complexity also creates challenges in trying to stay up to speed with the pace of change that is or may be out there. So how can internal audit on a very high level basis assist corporations, organizations in managing the risk and all the challenges that they face? Certainly the increased scrutiny increases risks, but I think to the extent you can look to your internal audit function or internal audit resources to help review areas that you see as risk, it can free up time and allow you to worry less and spend more time on what your key responsibilities are, and frankly focus on strategy and better manage the risks once you identify what risks are out there. Certainly an effective internal audit function can help you identify risk and evaluate risk and determine the level of residual risk. And then from there, management can spend more time just understanding the risk and how it relates to their execution of their strategy. The other piece of this too is I think internal audit certainly can bring in the expertise needed, whether it be around process, technology, compliance, and those sort of things to help management better understand and manage the risk around those areas. So again, I think we're all challenged with time requirements, the need to juggle a lot of different balls, and I think this is an area where internal audit can help you keep pace with change and manage some of those risks that you're facing on a day-to-day basis. As we move into the rest of this presentation, there's probably a few items I'm going to talk about a little bit more. I'm going to talk a little bit about the risk assessment process, talk about operational audits and performance audits specifically. And in particular, as you look at some of the surveys that have done by certain organizations like Institute of Internal Audit or Association of Healthcare Internal Auditors, they've certainly pointed to operational or performance audits as being an area of growth in the organization and the type of work they do. And a lot of that is really based upon the fact that there's more value that are brought from these type of functions, as well as the risk assessment process. That's not to say that process and control reviews are not part of internal audit functions. They are and will continue to be some of the more basic type of things that are done. I think that'll continue to be the process or be part of the internal audit function and add value, but certainly there's some emerging approaches that become bigger part of how this function can add value to the organization. As I mentioned earlier, involvement in new business or processes and bringing industry-specific skills are other areas that really can enhance the value of internal audit to an organization. First item I'm going to talk a little bit about is risk management process. And as many of you know, enterprise risk is certainly a broad function. It's really, I think by definition, is a management function, it's a strategic function. And that's going to be a bit different from when you look at, risk assessment performed by internal audit. Certainly they're not mutually exclusive. However, the enterprise risk management function should be and is typically more broader than the type of risk assessment that's developed for the internal audit plan or process that's in place. Typically, the risk assessment for internal audit is probably going to be a bit more focused and more thoughtful around what are risks that are auditable. Having said that, those risks really still should be somewhat tied to the enterprise risk management process, because if they're not part of some of the key risks of the organization, you probably need to step back and spend more time thinking about whether it makes sense to be auditing those. Are they really a higher risk area or not? Having said that, I think from a practical standpoint, any internal audit function is probably going to be involved in reviewing certain things or areas or risks that come up during the year, maybe aren't directly tied to enterprise risk management process, but they're an area that have been highlighted of concern to certain management or because of certain activities during the year. The enterprise risk management process, again, is a broader approach. I think we do see internal audit having involvement in that enterprise risk management process for a couple different reasons. Number one, um, I think they have the ability to bring a more structured process to the risk assessment approach. While the risk assessment process is certainly not going to be one where it's black and white and clear as to identification of risks, they certainly can help structure it to help bring a process around identification and scoring of those risks and bubbling up the more significant risks. Their skill sets that they bring, the internal audit skill sets, certainly help manage the process and keep it on track, given the fact that oftentimes the process involves a lot of different activities, including interviews with a variety of level of management. And so kind of making sure that things stay on track, timelines, priorities occur are certainly helpful. And then finally, internal audit, given their independence and objectivity, the fact that they have a seat as part of some of the leadership and management discussions and meetings around risk, I think are helpful because their independence should help avoid bias in the risk process and help keep the discussion more on track with things that are specifically identified versus things that maybe on a day-to-day basis concern people, and keep them at a real broader level. So again, the ERM process, enterprise risk management, is not necessarily an internal audit function. I think there's value that an internal audit can bring as being a part of it and certainly helping to manage that process. And again, distinguished from the risk assessment for internal audit procedures, which again could be more practical, could be more tactical, but certainly should be able to be tied into that ERM process as well. Shifting gears a little bit, I mentioned performance or operational audit, certainly an area that internal audit functions are spending more time on. And I think this slide and next slide, again, provide a little bit definition of a performance audit and highlight a couple things within this definition that differs from maybe what you traditionally think of audit or internal auditing. And in this case, again, performance audit, and this definition is from GAO, government auditing, based upon government auditing standards. This definition relates to governmental or not-for-profit entities. So I want to distinguish that from operational audits. Actually, we have a session down the road, a webinar on performance audits and operational audits alone, so we'll talk a little bit more about it. But in the governmental world, again, it's an independent examination of a program, function, operation, systems, or procedures to assess whether the entity is achieving economy, efficiency, and effectiveness in the employment of available resources. So I like to point out the economy and efficiency because I think that goes past effectiveness. The pure process of, is the control in place, and is it managing the risk around a certain objective? For instance, you may audit disbursements, and you may be able to identify the fact that disbursements are being paid in accordance with a purchase order and invoice, and they're being approved. All that works, it's effective. What gets into the financial statements is accurate. The question then is, if you take it one step further, is it being done in an economic and efficient fashion? Are you utilizing resources effectively? And that's really where the performance audit takes another step. When I talk about performance audits too, I do want to point out in the governmental not-for-profit world, there is a more structured framework around it, and that last sentence somewhat addresses the fact that there's some adopted methodology. So there is a bit more structure around performance audit than there would be operational audits, although I think the focus is substantially the same. Operational audit, you can read that definition and you can see it's very similar to performance audit. I think the difference is in the governmental world, there's a little more structure to the process and reporting. A couple things to point out here is in the bullet points below, the point made is that the auditor does take steps to evaluate operational activities. And then in the second one, there's a much more in-depth review that's done versus a pure audit of a process. And it's really meant to obtain to understand whether that process is obtaining an optimal level of efficiency and effectiveness. And again, I do want to point out that we will have a separate session on these type of things down the road. And I am going to spend a little bit of time talking now about some examples of operational audit and how it's distinguished and what a lot of people might think are traditional audits. Oh, with that, we have our first polling question. Amy, if you want to lead us through that, that would be great.
Internal auditing is an independent objective assurance and consulting activity designed to add value and improve an organization's operations.
Good job. I think true is the correct answer. I'm going to tell you the polling questions. We're not going to test you too hard on most of these. They're primarily just for ensuring that people are attending and available or online as part of this. So anyway, we'll have three others as we move through the presentation. And again, this is just a reiteration of the discussion of what internal auditing is, going back to kind of one of the earlier slides. Going back to operational audits, just to point out a couple things here. Again, I'm going to hit home on the concept of efficiency and effectiveness, and maybe give some real simple examples, although this can be taken to a variety of areas in an organization, supply chain and other types of contractual relationships and revenue processes. But on the right side, under operational audit, this audit relates to the payroll system. And again, in looking at maybe what many people would expect a traditional audit, it would be reviewing to make sure that time cards are approved and reviewed, that there's some sort of review of the payroll costs, departmental budget, reviewing changes from the last period or outliers, to ensure that what's being processed as payroll is accurate. So there's a variety of controls that would be typically looked at to ensure accuracy and of the process. In an operational audit, you're going to dive deeper, and in just looking at the yellow box information, you'd probably be looking at, as an example, number of records processed, the cost of the department, number of errors, and as an example, errors, there may be errors in the process that are corrected through some back-end control. And so ultimately the conclusion is it's effectively controlled. But if there's a lot of errors that occur that require rework that are caught, and I'm not talking about those that aren't caught, mistakes made that individuals identify payroll process or through the process of reviewing their pay. I'm talking about those that are caught through the process. They may be effectively controlled, but the real question is that an efficient process and effective process in total, because there's a lot of rework to it? Or are the costs of the department high, and why are they high? And so then it takes, it would entail kind of looking back and trying to identify, why are the errors occurring in the first place? And is there something not in place on the front end that's creating these errors? The same thing that from a cost perspective, trying to understand in some level of benchmarking around costs and whether that department appears to be operating effectively and reporting back. Again, this gets back to risk and residual risk. You may also have an organization that has zero errors. Everything is processed perfectly, the system works well, but it's really high cost. And then you've got to step back and go, are we managing this to zero risk? And is that the right answer, because we're spending a lot more money or have a lot more people in the process than we would need? So again, that's a bit of an example of an operational audit, and I've got a few other things on future on the next few slides too, to talk a little bit more about it. So again, pretty simple example. There's a lot more depth that where operational audits can head as well. A couple other examples of things that I've seen that organizations have used internal audit to do around operational auditing: contract compliance and performance. And I have but really performance is a key part of it. many times organizations will outsource a process or co-source a process, and those relationships are defined by a contract. And there's kind of two aspects to it: reviewing the contract to make sure it's got all the appropriate provisions in there, and then secondly, is the relationship operating in accordance with the contract? Is the contractor meeting all its obligations? Is the performance effective? Have they reduced or improved the process? For instance, if it's a process around, if it's contract around maintenance, or a contract around repairs, or a contract around cleaning, are all those things being done in accordance with the contract, and has the organization seen lower costs with respect to repair costs, reducing the need to acquire new equipment, and is the in-source or outsource versus in-source cost, does that make sense? Are you saving money ultimately if that's part of the contract? In the healthcare world, we also see risk-based contracting becoming a more common item, and the risk can be based upon cost, quality, or other factors. Internal audit has certainly, I've seen internal audit groups get involved in reviewing, again, the contracting, and ensuring the makeup of that risk-based settlement, and the data that goes into it is appropriate in accordance with the contract, and is supported, and all the right data is included in there. So another way that internal audit can add value. I mentioned earlier, functions, are they performing as expected? And I know we've been brought into certain situations where CFO or controllers got a lot on their plate, but they don't feel comfortable about an area, so they want us to do more of a high-level review of a function, an area, complete department, and give us some perspective of the control processes in place, the overall structure of of that particular area, and whether there's enough or too many resources. And then I think quality monitoring too, depending on the organization, a variety of areas. There's quality metrics, and are those metrics that are being developed, are they being developed appropriately? And then why or why not is quality being maintained in a particular situation? So again, just some other examples of this type of operational type audit processes or opportunities, if you will. Down below, I do want to point to you cash, a pretty simple area, right? Overall, something that's pretty common to review cash controls. Pointing out just maybe a couple things where an operational audit would go, where oftentimes you may not see them go in a traditional cash audit. The second bullet point talks about identifying and investing excess idle funds. So not only understanding cash receipts, but then how are those managed, and how are those funds invested, and what's the budgeting and management process around excess funds? So that's, again, it goes probably a little deeper than a traditional cash audit. The same thing down below when it talks about review arrangements with financial institutions to identify risks. Again, with electronic funds transfer and those sort of things, it's reviewing not only the contract, are all the appropriate things in place, but are all those key controls happening between the financial institution and the company to manage risks with respect to financial institution activity. So again, just some examples there. More operational audit items. I don't have a lot of additional things to say here, other than you can see in some of the language. I'll let you read it, that criteria that established should also include both performance as well as control, and should be addressing any potential operating problems that may arise. So again, operational audits, a growing area for internal audit departments, and I think there's a lot of potential value in there, and certainly an area that people can think a little bit differently about internal audit and how they can help out organizations. Other areas of value, probably won't spend a lot of time on this slide, but point out maybe a couple things. I think oftentimes as I travel around and talk to people, we often hear of concerns about not so much that there's a problem, but they're not sure what they don't know. So they may have gotten into a new venture, may have acquired a business, may have joint ventures, or they may have remote locations that do handle some front end aspects of control or processing, and the management team is just not quite sure if they're comfortable with what's happening, and it may be every now and then they run into an unusual adjustment or an unusual item that pops up, and it may not be terribly significant, but it raises a question in their mind. And I think those are the type of things where having the resources or a resource like internal audit to go out and take a look at those type of things, defining what you're looking at from a scope perspective may make some sense and add some value. Internal audit's been involved in due diligence, certainly not only understanding the acquisition target and risk in their financials, but probably more so, I think they can help provide some recommendations on functions that could be streamlined, improved, consolidated, because they obviously understand the corporate organization and have some understanding of how maybe these two could merge together. Down near the bottom, construction costs, we see that in healthcare a lot and other industries where there's construction activity. Auditing construction costs, I think, is always an opportunity to identify savings. We talked a little bit about asset integrity and maintenance and treasury risk, another area of risk, particularly given the transfer of funds and the risk of cybersecurity type acts are something else that internal audit's got more involved in. I think can certainly add value. This next slide talks, I call it emerging areas. Many of these have been done for a while, but I think as an internal audit function, these are areas that they've delved into a bit more than they have in the past. Data analytics, culture, continuous auditing, which to me somewhat ties into data analytics. You can build more of a continuing auditing process around the use of data analytics. Industry-specific risks, I mentioned healthcare and billing and coding is an area that we often see people needing help in. Data security and governance, and then quality. Again, by industry that can vary, but most industries have some level of need or desire to maintain quality, and helping audit the quality process and quality reporting is something we've seen more of recently. I'm going to talk really about three of these in a little bit more depth here in the last 15 minutes we have: data analytics, culture, and data security, and give you a little bit more background on what those are and what they mean. I'm going to start with culture, actually, first of all. Culture is the study and examinations of an organization's cultural characteristics to determine whether they hinder or support its vision or mission. Obviously a very broad question, and we have a polling question, so I'll delve into it after this next polling question. Amy, if you want to take over from here.
Sure. All right, second polling question. What characteristic of an organization is used to determine whether they hinder or support its vision and mission?
Good, very good. Culture was the correct answer, so obviously the vast majority got that right. Good job on that. So culture, this is probably one people go, you can audit culture. Well, I'm not going to say it's easy. Culture, the controls are very soft, clearly very soft. Oftentimes it gets to leadership and governance, whether there's shared values, communications. And typically culture is, audits are focused around ethics. And I think in general, if you look at internal audit organizations, that's generally what they're focusing in on when they're talking about culture. And I think there's different ways to look at that as to how you focus on culture and what you may want to look at. Because there's certainly some specific audit components that you can look at, and you can break down culture, I think, into different areas or components in order to more effectively looking at it. Certainly auditing culture is complex and it's continually changing. And there's not going to be no standard model audit program or checklist. And I think the changing nature of culture is interesting, in whether it's changing or it can be different from organization to organization. I think that's also a piece of it as well. For instance, you may be operating in a high growth startup environment, and so that culture may be a bit more fast-paced, growth-oriented, aggressive, versus a more well-established organization with strong quality and strong products. So, I mean, I think all of those you have to think through when you're evaluating culture, and that's part of what makes it a bit of a challenge in looking at cultural components. I do think, though, it is first of all auditable. I think it's important, though, if anyone's looking at how can internal audit help them evaluate their culture, to really sit down and define the scope. For instance, as I mentioned, culture is often in the context of culture audits are often viewed at looking at ethics, which are clearly very important. But there's other things that can be reviewed too. Things like your customer service culture within an organization, or how people treat each other within an organization. Those are things that can be looked at. I think it's important to make it manageable and focused. You may also want to embed it into other projects or audits that are performed, in order to build in questions so you're getting input, continually. And how do you audit culture, or what are the results of it? First of all, in auditing culture, I think the challenge is getting a good cross section of input. And if you're in an organization that has 10, 20,000 people, that's tough to do. And that's why it's important to try and define it and break it down into smaller components. But there's a lot of things that can be used as part of the process. Certainly, normal employee surveys, customer surveys can be used to review what's happened there. Other type of input, if there's those type of forums where employees can make suggestions, those are important. I think interviewing is a critical part of this, and you got to sort out and figure out how to have a nice cross-section of interviews. But certainly there are things that can be built into day-to-day or continuous process that can build the culture. If you look at organizations that, for instance, have strong cultures around customer service, they clearly have things built into their training, their onboarding, their training programs. They have things built into how departments and managers interact with their employees. Do they spend time on a continual basis? If they do spend time with them, do they make sure that that particular aspect of what they're trying to convey, such as customer service or ethics, are conveyed? Is top management, when they hold first of all, do they hold meetings with the employee base and their reports? And as part of that process, is there a structured approach to make sure to convey the importance of, again, those type of things that you want to be a part of your mission and vision? And so those things can certainly be built into the day-to-day process, and into training programs, into meetings. And then also, I think culture oftentimes is built around communication and building that relationship. And so I think it's important to make sure that there's time set aside to do that. And frankly, we've run into situations where, what we've seen and heard from people, line people, is they're so busy with day-to-day activities and they're booked up from morning till night in meetings. The only ability they have to communicate with their direct reports or their people they report to is via emails after 5 o'clock. And certainly those are things that can be addressed through changes in process to improve the culture. And anyway, ultimately the end result, the report, certainly is not going to have can be a challenge, because you don't have a lot of black and white information, but you certainly can surmise some conclusions based upon the input you receive. And I think a lot of that can be very valuable to an organization in identifying gaps in how they develop their culture and the type of culture they want to convey across the organization. Next item I'm going to talk about is data analysis and data analysis and auditing. I am a big fan of this, and I think we'll continue to see more and more of this. The definition is here. The process of inspecting, cleansing, transforming, and modeling data with the objective of highlighting meaningful information, conclusions, and supporting decision making. Maybe a bit better discussion is on this next slide. What we've seen it used for is helping to look at historical information and try and predict what may be happening currently, or trying to interpret relationships, identify outliers through building data tools that allow you to compare different types of activities, expenses, costs, etc., to some sort of baseline. Deep learning is probably deeper, even a deeper predictive type tools where you're using artificial intelligence and past experience to predict the future to some extent, and ultimately data mining and text mining, looking at unusual items, unusual words, unusual phrases to identify some things that you would want to follow up on more specifically. I'll talk a little bit more about these and how we've seen it used practically right after next polling question.
All right, our third polling question, true or false? Auditing culture is a complex and ever-changing concept.
True is the answer. So thank you, Amy. I will take it from here. Back to data analytics, just to give you a few practical items. First of all, my recommendation is, well, some of you are certainly using some deep data analytics out there. For those that haven't delved too deeply into it, I would try and keep it simple at first and use it to have some successes from the standpoint of identifying some things that really maybe are concerning, and building some data analytic tools that can help you look at it a bit deeper than what you've been able to do. And maybe I'll give you a couple examples. Again, this is probably could be another session, but we still see it, we see it used in some of those traditional areas: revenue, expense, disbursements, payroll, general ledger, electronic interchange. And what's really amazing sometimes is the level of activity in organizations make it difficult sometimes to step back and see the big picture. They see the weekly, the monthly, the quarterly reporting, but and they may identify some things that appear unusual, but they don't know if it's unusual, if it's happening frequently. And so we've seen it used in areas, and maybe I'll give you a couple in the payroll area, where we've been able to help people build data analytic tools around payroll and identify things like overtime, unreasonable overtime, or overtime levels compared to the norm in their department, comparing things such as number of pay raises during the year. Typically, you'd only see one pay raise during a year, but if there's individuals getting multiple pay raises during the year, you'd want to make sure that makes sense and understand why that's happening. Multiple locations where pay or other disbursements are being made. PO boxes or changes from an address to a PO box, and why did that happen? Payments to either vendors or employees with very similar names. Duplicate payments. Those are all things that we've seen used, and there's frankly unlimited number of metrics or baselines that could be run around that. And the same thing on the revenue side, trying to identify unusual revenue entries or unusual trends with different types of customers over a period of time and why that may happen, and building models that would be able to look at kind of a band of what would be in the norm, and if anything's outside the norm, higher or lower, follow up on that sort of thing. Certainly in the financial reporting side, general ledger entries, that's probably been used more frequently, but you certainly can build some things around unusual entries, unusual terminology used in the entry, even numbers, entries at unusual times of the day. Certainly looking at people making entries that would typically not make an entry in a certain area. So someone who's more involved in the expense side making a revenue entry, for instance. Those all can identify some unusual issues or potential risks. Same thing with electronic interchange. Certainly trying to identify what's happening, how frequently it happens, and what type of transactions are occurring. If there are any outside of a norm set, can be of value to an organization, understanding if there's any risks or inappropriate activity going on. Just a few thoughts on data security and governance. Most of the discussion around controls, internal audit, it's hard not to talk about cybersecurity. It's a pretty broad topic with a lot of risks. I think certainly if internal audit has the appropriate skills to look at deeper cybersecurity risks and controls around there, incredible amount of value to it. I think the other piece that I may want to point out to the audience is that I think there's a whole governance process that needs to be looked at or should be looked at. Certainly within the information technology department, there's a lot of activity going on in virtually all organizations around reducing risks of phishing attacks and other type of access issues. I think the challenge is for management and the board is, do they understand the particular risks? Is there the knowledge necessary to manage those risks? And I think diving into that a little more deeply, has there been a risk assessment done? What are the risks that are out there, and how do you rate those risks? Does that get updated frequently because the risks are changing? And certainly there's going to be risks out there. And is there a risk strategy in place? And then ultimately, is there reporting back up through management and the board as to what's being done to manage the risk, mitigate risk, and what type of activities are occurring? Because in this day and age, almost all organizations are getting hit continually with phishing attacks and other types of things. And is that type of reporting occurring on a routine basis? As an example, financial statements and operating activity are reported monthly to the management and to the board if they hold monthly meetings. Is there periodic reporting of risks around data security being done on a routine basis so the board clearly understands the risks and the mitigation activities in place? So again, something that probably deserves a lot more time, but just a few thoughts on how internal audit can be leveraged to look at some of those governance processes. We're nearing the end here. Just maybe one point on, I talked about compliance. Oftentimes this is industry specific. Oftentimes there's things that are required to be done or should be done to meet the expectations of the regulatory environment. Healthcare, you see billing and coding being important. I think banking, lending requirements, certainly in governmental world, grants and internal audit can help you manage those risks and help you assess those risks too. What's the compliance program look like for some of these? So again, another area that might be beneficial to think about as far as your internal audit group or utilizing internal audit. With that, I think we have our final polling question.
All right. Final polling question here. Data analysis and auditing is defined as no standard model, audit program or checklist, a systematic process of evaluating organization's effectiveness, the process of inspecting, cleansing, transforming, and modeling data with objective of highlighting meaningful information, or none of the above.
Yeah, I think number 3 is the correct answer there. All right. So anyway, that's our last polling question, and I think that covers everything. Just a reminder that there are some additional webinars coming up on a variety of different topics. I think, Amy, those will all be CPE ready as well.
Mm-hmm.
And so these are just some things you may want to keep in mind as we move forward. There's a couple that'll be around internal audit, performance audits, and quality assurance review. And with that, I think we'll just wrap it up with any questions. Question from someone. Typically, what size does your company need to get to before they start really getting serious about internal audit? That came in. That's obviously a challenging question. I think what and I don't want to dodge it because it's a good question. I do think what we see is that smaller organizations, less than $100 million in revenue, and I know revenue is not the best. It's a challenge to staff and maintain internal audit. And I think you have to always be comfortable you can train the individuals and identify good resources. So it's a bit of a challenge. And so oftentimes To the extent there's risks or needs, we're going to see them look to outsource it, go to an outside firm to do it. As you get larger than that, I think we start to see more companies trying to build an internal audit practice. I do think a more developed practice certainly is going to be much more than 100 million in revenue. But again, it depends on the risk and the issues you see, and I think internal audit can be used in a way to really add value. So again, that's Scott speaking. That's not through any benchmarks out there. There are some benchmarks that I could get you as well as part of that response. Any other questions out there?
Not that I see.
Okay, good. Well, I think we're 1 minute before the time here. Amy, any parting comments before we wrap it up?
And if you do have any further questions, just go ahead and contact us.
Good. Well, thank you, everyone, and have a great rest of your day.
You too. Thank you.